Welcome everyone to Vested Interest. This is Shane back for another Stock Pick of the Day video. Today we're going to take a look at one out of the energy sector, Halliburton. It is July 24th, and this is a recommendation from Tanya Myers here. You don't have to yell. I'll take a look at it. Just kidding there. Tanya, we're going to take a look at Halliburton, and this again is out of the energy sector. Let's jump in here. If you could do me a favor before we get too far into the video, if you could hit that thumbs up button down below if you are a dividend growth investor. Hit that subscribe button. Join us on this journey to financial freedom. Make sure you ring that notification bell so you're notified whenever we put out any new content. I do requests, just like this is a request. So if you are a subscriber or a viewer of the channel and have a company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below and I'll work it into the rotation. And just one more reason to make sure you hit that notification bell. And doing all of that, hit the thumbs up, hit the subscribe, hit the notification bell. It really does help a small YouTube channel like mine with pushing out the content a little further. It helps with the YouTube algorithm. Watching a little longer than you normally would does as well. Watch time is one of the metrics that they look at. And I'm sorry, not subscribing, that is one, but also any comments down below would really help as well. So if you have any questions, again, if you have any suggestions, drop them in the comments and I'll try to respond as quickly as possible on the same day that I post a video. It's getting hard to respond to some of the older videos, so apologies to those of you who maybe are making comments on some of the older videos. If I haven't got to those, it's just a little harder now with as many subscribers as we have, a little over 1,000 now. It's a little harder to get to some of the older comments. Now, this is the Vested Interest Stock Screener. This is how I look at a company on a high level. Out of the thousands of companies out there, it's a way for me to screen on its initial screener the company to see if I want to do more of a deep dive. And just because it meets 5 of 8 or 6 of 9 if it's a bank or a insurance company does not mean I am buying. It just means it goes into my watch list, and then I do more of a deep dive into the financials, looking at stuff like the balance sheet and the income statements, debt to equity ratios. Is their revenue growing over time? What do their margins look like? Are they expanding or are they contracting? Are they paying down debt or taking on debt? Are they diluting you as a shareholder? I like to look at the PEG ratios, price to book. There's a bunch of metrics that you should be looking at if you are investing in individual stocks. And if you don't want to do those type of deep dives, you should just stick to index or ETF investing. And Warren Buffett would recommend an index or ETF based on the S&P 500. So something like VOO, Vanguard's S&P 500 ETF would be a good choice. Now back to Halliburton. Check them out at www.halliburton.com. That's www.halliburton.com. That is their homepage where I pulled this information from. Excuse me. Innovation from day one. Halliburton's continuous focus on innovation began in 1919, so over 100 years here, with founder Earl P. Halliburton, a pioneer in oil well cementing. Earl P. built a wooden mixing box and started his first oil well cementing business in Duncan, Oklahoma with a borrowed wagon, a team of mules, and a pump. His first innovation, a new cementing technique that quickly became renowned in Texas and Oklahoma. Throughout his life, he patented 38 oil field services and tools as well as other inventions. Collaborating and engineering to maximize asset value. Our experts collaborate and engineer solutions to help customers maximize value throughout the life cycle of the reservoir, that's the oil drill site. We combine technology services and execution expertise to assist our customers with hydrocarbons location, geological data management, drilling and formation evaluation, well construction and completion, and production optimization throughout the life of their assets. So they're in every aspect of the oil drilling business here. Now they were down 1.49% on the day. We are talking about Halliburton Company, ticker HAL, out of the energy sector. Closed out the day at $32.99. 52-week range as low as $32.60, as high as $43.85. They are right up against their 52-week low, though there is not much of a range here, right? $32.60 to $43.85. That's not a very big range here. They're pretty much range bound, it looks like. Market cap of $29.206 billion, a beta of 1.94. So they are more volatile than the overall market, and it's significantly more volatile. And you can see that volatility, though you could use it to your advantage, right? Trying to buy them whenever they're low, which again, not much of a range here. PE ratio is very low, $10.96 per share. EPS sitting at $3.01 per share. Earnings date is coming up October 22nd through October 28th, sometime in that window there. Forward dividend is 68 cents. They are quarterly payers. Divide by 4, though we'll see that here in a little bit if you just give me a little bit of time. It'll be one of the last slides we cover. Their yield is a little on the low side, 2.03%. Ex-dividend date, June 5th. Looks like they paid out on June 26th. So you would be in line for the next dividend payout, though you're going to have to wait a couple months to get it. 1 year target estimate, at least according to Yahoo Finance, $44.55. So they see it setting a new 52-week high over the next calendar year. Now we're going to look at dividend yield theory and see if this one is potentially undervalued. To do that, we take a look at their 5-year dividend yield average at 2.14%. We compare it to the current 2.03%. Over here where it says forward annual dividend yield, 2.03%, same number. And since it is lower than their 5-year average, that speaks to overvaluation. At least according to dividend yield theory, this one is potentially overvalued. Very low payout ratio though, 21.93%. Gives them a lot of room to continue to increase the dividend, buy back shares, make acquisitions, reinvest back into the company, pay down debt, all the things that companies do with free cash flow. They have a lot of extra cash on hand. Now we're going to look at free cash flow. Typically, we want growing free cash flow. As a company has growing free cash flow, they tend to increase their dividends along with it. 2021, you can see here 1.1 billion. 2022 up to 1.2 billion. 2023 up to 2.07 billion. And the trailing 12 months, now keep in mind, this does include part of 2023 and what's been reported so far in 2024. It is the trailing 12 months, right? So 2.38, I'm going to give them growing free cash flow, and they are also repurchasing their shares since 2022. So very nice to see that, though we'll have to really wait to see what 2024 actually looks like and see how much of this 950 million in shares and how much of this 2.3 billion is from 2023 numbers. Now let's jump over to stockanalysis.com. They have 16 stock analysts that have taken a look at this. They call it a consensus buy. And if you were to go to stockanalysis.com, you could click on each one of these. This is a strong sell, a hold, a buy, and a strong buy. And you could see how many of the 16 analysts call it a strong buy. I will say the majority called it a buy or a strong buy. And I always recommend more than one source so that you can make sure the information you're getting is accurate and up to date. 2 that I like are Yahoo Finance and stockanalysis.com, but you pick any sources that you want. Just make sure you are not blindly trusting just one source. Sometimes the information is wrong, sometimes it's not updated. Now they have a low estimate of $40. It currently sits lower than their lowest estimate. If it comes back up to their low estimate, that would be a 21.25% increase from where it currently sits. They have an average estimate of $45.45 or 44 cents. That would be a 37.74% increase. And if it happened to hit their high of $52, that would be a 57.67. Yeah, I don't know what's wrong with my eyes today. 57.62% increase. All the while you could collect that 2% dividend yield. Now we're going to jump into statistics here. We're going to look at return on equity and return on invested capital to see how well this business is reinvesting its capital back into itself. I like 10% or better for both of these metrics. Return on equity sitting at 28.1%, smoking high, that's good. Return on invested capital, almost double what I like, 17.47, so good numbers overall there. EPS growth, I like 5% or better forecasted over the next 5 years. They're sitting at 7.65, so that would be a check there. And revenue growth, I just throw in as a bonus. We want growing revenue over time. That would be a 4.5% projected growth over the next 5 years. Good numbers overall. Now let's wrap this one up by looking at their dividend history. Again, quarterly payout ratio, very low, in the 20s, 23.61%. Now, they're saying very fast dividend growth, 17.86, but they're also saying they have not been growing their dividend for very long, and I don't know that I believe this, because if I look here, this is at least going back to 2021 that they've been growing the dividend, so it's got to be more than 2 years, right? So I don't trust that. They do pay out on the March, June, September, December timeframe. And going back to 2021 in December, they were paying 4 cents and fractions of a penny. In 2022, big jump up to 12 cents there. In February 2023, they jumped it up to 16 cents. And in March of 2024, they jumped it up to 17 cents. That's the most recent raise. So they've got at least 4 years of dividend history with nice dividend growth. Double-digit dividend growth is very, very nice to see. So again, very good numbers overall, very low payout ratio, nice dividend growth. 16 analysts called a strong buy. Might be worth doing a little bit of a deep dive into the financials and see what's going on with this one. Why are they so undervalued, and why are they range bound? That's not a very big range only from about low 30s to around the low 40s. So not a big range. Usually you see more of a range, but that's not necessarily a bad thing. You can buy in at a cheap price. And again, with it being so volatile, almost a 2% volatility, almost a 2 beta, then maybe you can get it on the low days. All right, let's jump back over to the screen or understand the business. That's where we started. Check growing free cash flow. Yes, it's growing dividend very fast, actually 17%. Growing dividend, or I'm sorry, growing free cash flow the last 4 years. The growing dividend is very fast, almost 17%. Yes, growing free cash flow. Yes, growing dividend. Yes, dividend payout ratio of 75% or yes. Yes, it's down in the 20s. Check there. Dividend yield theory says it's potentially overvalued. No check there. Buy below current cost basis. It is right up against its 52-week low. So we got to check there. Return on invested capital and return on equity, both over 10%. And earnings per share growth is at 7%, so it's over the 5% I'm looking for. We did not look at price to book. So that's 1, 2, 3, 4, 5, 6, 7 of 8. This one would make it on my watch list. I'll be honest with you. I am not looking for anything in the energy sector, so it's not technically going to go on my watch list. But if you are looking for something in the energy sector, this one might be worth taking a look at. Just make sure you're looking at the financials, see what's going on with this company. How are they doing? Is their revenue growing over time? Are their margins expanding or contracting? Is their debt being paid down? Looks like they're repurchasing shares. Make sure you understand a little bit more about the business before you jump in and blindly buy. Don't just buy because me or anyone else tells you a company is a good buy on YouTube. Make sure you are doing your own due diligence and make sure you have your own screener and your own investing criteria set up. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. And if you have a company like Halliburton you would like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below, and I'll work it into the rotation. And click that notification bell so you're notified whenever we put out that video. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in, and we'll see you in the next one. I am not a financial advisor. Nothing in the presentation should be considered financial advice. I am only sharing my opinion and investing in journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you are not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.